Good morning, everyone. Welcome to the European Crossover Webinar. And we just got the Eurozone market manufacturing PMI came in at 54.8. We actually started the morning off 45 minutes ago with Spanish manufacturing PMI came in a little bit stronger than expected. They're looking for 51. They got 52.5. Italian came in a little bit better at 53.8. With French at 51.3, also outperforming just a hair. And then, of course, like I said, we just got, and then German at 58.2, and then we just got the Eurozone. We do get UK manufacturing PMI at the bottom of the hour, and then we have Canadian PMI. That will be at 9:30 Eastern. And then the U.S. manufacturing PMI, but once again, its final reading is going to be at 9:45 Eastern with construction spending at 10 a.m. and ISM. Now, ISM manufacturing should go and move the needle. That one will be at 10 a.m. Eastern. Market manufacturing, that's final number. But the ISM manufacturing, well, it says final number. It's still October, so that's still going to be key. Then, once again, this should go and move the needle. 10 a.m. Eastern is not only ISM manufacturing, not the market, but it's also going to be manufacturing prices paid, employment, and those new orders sub-index. So those sub-indexes will be key from prices paid, employment, new orders index. And let's take a look where we are. Well, the euro's still slipping a little bit. We do have some support here at 1624. I believe that might be our bias chart support anyway, coming into today. Certainly a dip here. We are seeing the indices improve just a bit here. Bear with me. You can see here with the NASDAQ at 11,125. I had posted in here, I thought this was going to be a good little rebound area, which it turned out to be, which is the 10,959. And you can see that. That's an area that we bounced off of. And go move this a little bit over here. Probably get a decent little rebound from here. It may take us up to right there, which would be 11,229. But we are pretty oversold, or fairly oversold right here. So this is a good little rebound area here. This 10,959. Actually, when they came off it, they first tested it. They hit it right to the pip, and then they bounced all the way back up, and then they came back down to retest. And then you can see here, we've moved maybe this jump up here. First resistance area, I guess, is going to be this 11,176, but potentially we can come up to, at least on the first blush, I believe, make it up here to 11,229. Taking a look at what we stand here with the S&P. Didn't even notice we'd broken below at the time the June low VWAP. We're back above it again. Really don't want to. We already made a couple trips below and we're sitting here. Gonna remove that. Boy, it's really been all over the place here. So trying to pick itself up a little bit. And just a quick look-see at gold. Oh, we did make it down to VWAP. I didn't notice that. I guess it's been on Thursday. That VWAP, which previously been at 1842, I believe it was, or maybe a little bit higher. You can see the last time they made to VWAP, they made to VWAP again here, and that held. And we've rallied, $26 off of that VWAP. And by the way, that's the VWAP off of the March lows. So pretty key there. So we are coming up a little bit close up here to 2-day VWAP, which would be 11, probably around 11,162, 63. But as I mentioned before, is that we do have a level here at 11,176. I think we can make it up here to 229. So pop up here, which that may be right around 176. Hang on right there. It's actually 11,169. And you can see on the 30-minute, we've just generated a buy signal. So we can get, maybe we can get a little bit of upside momentum. And let's just take a look at the stories that we have so far to start out the week. The Australian dollar hits a 15-week trough. Upbeat data offers some support. The Australian dollar tests a 15-week low on Monday as more coronavirus lockdowns internationally darken the outlook for global growth. Though upbeat data at home offered some support. The Aussie was pinned at 70.17, having its lowest since mid-July at 69.97. A sustained break of the support line, 70 cents, could open the way for a retracement to 69.20. The New Zealand dollar was eased to 66.01. That's been my key level, actually, to the pip. That's 66.01. We'll pull up the charts. We'll see it. And hit its lowest in almost 2 weeks at 65.91. It has major support in the 65, 45, 55 zone. The commodity-sensitive currencies have been slipping as shutdown across Europe threatened to drag on global demand, with England being the latest to act. Yet both countries have been relatively successful in containing the virus, helping their domestic economies to recover some ground. Australian data out on Monday showed approvals to build new homes surged to 15.4% in September as buyers rushed to snap up mortgages at record low interest rates. The demand saw national home prices at a 5-month losing streak in October with a rise of 0.4, confounding fears the market could be down 10% by year end. Job advertisements also showed a continued revival in October with a rise of 9.4%, though analysts suspect unemployment will stay unacceptably high for some time. The Reserve Bank of Australia has signaled its readiness to act, and markets look for a rate cut and a shift to quantitative easing at monthly policy meeting on Tuesday. Yields on the 3-year spreads have dropped to 13 basis points in expectation. The RBA will trim its yield to 10 basis points while expanding its bond purchasing program by around $100 billion. And the dollar in a narrow range ahead of the U.S. election. Obviously, this is the front and center is going to be the big key thing that we're looking at. The U.S. dollar steadied on Monday as investors prepared for U.S. presidential elections on Tuesday, while a surge in global coronavirus cases continued to weigh on sentiment. The greenback held onto its gains after posting its largest weekly percentage rise since September in the previous trading session. The pound inched lower on coronavirus worries after Prime Minister Boris Johnson announced over the weekend a 1-month lockdown across England. Investors are sticking to the U.S. currency, which is often considered to be safe, as Tuesday's presidential election keeps financial markets on edge. Democratic challenger Joe Biden leads in the national opinion polls, though the race is seen as close in enough battleground states that Trump could achieve the 270 votes needed to win in the state-by-state electoral college that determines the overall victor. Currency volatility can extend well beyond election day because there's a high risk the losing candidate will dispute the election results. The 2000 election took around 1 month to resolve the disputes, analysts at Commonwealth Bank of Australia said in a client note. Well, yes and no. They did know the winner that night. The difference is that Trump is possibly, he's even, initially they were saying they would declare themselves the winner on Thursday if they were just in the lead, which is a bunch of, I'm not going to say the word, but a bunch of BS. I mean, without the votes counting, it's like as if you're ahead, like think of it this way. You're in a football game, whether it's European football or American football. I'll use that example. So in the third quarter, you just happen to be up. American football, you happen to be up 20-13 and you say, you know what, I'm calling the game, we're ahead, that's it, game over, which is a bunch of, I'm not going to once again say the word, but I'm saying those are the stunts that he's trying to go and pull. The dollar index, which tracks the greenback against a basket of currencies, was last at 94.17. England's lockdown, aimed to last until December the 2nd, could be extended as Britain struggles to contain a second wave of COVID. A senior cabinet said on Sunday, the United Kingdom is grappling with the more than 20,000 new coronavirus cases a day. Against the dollar, the pound was up to 29.04, with traders also eyeing updates on Brexit trade talks. EU and Brexit negotiators will continue talks with Brussels on Monday until around midweek. In Europe, COVID cases have doubled in 5 weeks. Reuters tally showed, with total infections surpassing 10 million. The euro steadied in Asian trade, but was close to hitting long-term lows against the greenback and Japanese yen. The euro has been selling since infection cases and lockdowns stood out in Europe, said Daisuke Uno with Sumitomo, but infection cases in other countries like the US have been on a rise as well. As time goes on, I think increasing coronavirus cases and lockdowns will be common topics in any country to the extent that they are no longer things for the currency market. Indeed, the US, nearly 87,000 cases on Saturday and record hospitalizations in Midwestern states. The risk-sensitive Aussie dollar has took a hit from global coronavirus concerns, last trading at 69.99. And blah, blah. Let's just go and move into the analysis. So the euro closed at new lows to finish the week. Support to start the week will be 16.24, which it looks like we hit it just to the pip, with resistance at 17.03. So that's where we stand. 16.24, 17.03. And we will have to go and change this to bearish. So 1624 and 1703, and you can see where we come up with the 1624, and that's so far held it. Let's go move into the cable. So cable closed a week in a tight range on Friday. That's Friday there. Key support remains at 28.78 area. You can see it right there. Two consecutive daily closes will pretend with two consecutive daily closes below that 28.78 will pretend a move to 27.08. Support on Monday will be 28.31 with resistance at 28.90. So we're still holding up well above that, but 28.31 for support. With resistance at 29.90, and it still remains bullish. Moving on to the Aussie dollar. The Aussie closed at the lower level of the prior week. Support on Monday will be 69.80, which we almost made it there, with resistance at 70.77. And not sure we can keep this bullish anymore. Take a look at the overall picture. Yeah, gonna have to lean on that one. We are below this area. It's actually been closer to a range almost, but we kind of held, jump back here, we slid back. If we get a close, you actually need two consecutive closes that'll flip it to bearish. So we'll keep that one bullish for now. Now the Kiwis hold up better. You can see we can still keep this one bullish, and the Kiwi defended the 66.01 level at the end of the week, prior week that is. Potential is for a slide as the U.S. election is upon us. Support on Monday will be 65.75 with support with resistance at 66.77. And that's bullish. Moving on to the dollar CAD. So the dollar CAD closed Thursday with a medium-legged doji. You can see that right there. Friday was similar, albeit in a very tight range. The pair has potential to run stops on both sides as we go into the election. Resistance will be 33.84 with support at 33.27. And that was meant to say 32.27, obviously, on the support side. 32.27 and 33.84. And still remains bearish. Onto the peso. So the dollar peso rallied to 21.48 before paring back a bit. And that's doggone it, it didn't update it. Because I know what I said was It rallied to 2148 for a consecutive day. You can see that because we had the 2148. We had 2148 previously before as our resistance on Friday, and then it slid all the way back. And I had support. We went with the levels for 2107. Let me see what I had for resistance. Bear with me. Which would have been this body here, which would be, I don't think I would have had it that high, 2138. You could check on the thing. I probably would have had it off of this body, or that one right there. That one made more sense right there, which would be 21. I still think that's a bit high, but that actually is just a hair over today's high, but 2136. I think it might have been a little bit lower, but we'll go with the 2136, which is still above today's high and still bearish. Let's go to the dollar yen. So the dollar yen on Friday had a hammer suggesting a market may be sold out temporarily. Resistance on Monday will be 510 with support at 426. And looking to the cash dollar index. The dollar index closed the week steadily higher. Resistance on Monday will be 94.37 with support at 93.35. And the high so far has been 94.28. So it's 94.37. And we do have to flip that to bullish for now. Just like we inversely flipped the euro to bearish. And support 93.35. It's giving it a pretty wide range too. Kiwi yen. So the Kiwi yen closed Friday with a medium-legged doji. You can see it right here, right smack dab in the middle. The downside may be temporarily exhausted. Resistance on Monday will be 68.89 with support at 68.88. Oh, resistance will be 69.89 with support at 68.88. Thought it did the same thing again. And this would be bearish. And you can see that I mentioned that was a medium-legged doji. So generally with the medium-legged doji, you got a wide range and you close in the middle, which means bulls don't have control. We close down here. Bears don't have control. We closed up here. But what has been the prevailing direction? It's been down. So generally you'll see the market go counter to that as it resets itself. That's what I'm saying. The downside might be temporarily exhausted, and we're working a little bit higher right now. On to the euro pound. So the euro pound broke lower on Friday amidst the overall euro weakness. Support on Monday will be 89.73. You see way down here. Thought we might see some further follow through with resistance at 90.21. We're actually even above that right now. And we have to respect where we're at. Can't say, well, here's the resistance here, so we'll just go with the level, which would be pretty crazy if it makes back up to that, but you never know. So it's just going to be 89.73, 90.56. And let's go to the Euro odd. Well, Euro seems to be doing a bit better here. We're 20 pips off the lows off of that bias chart support at 1624. Now we're at 1643. Euro odd is all over the place. The pair has dueling weak currencies. Resistance will be 67.06 with support at 64.84. So we're given a wide range. Still bullish for right now. On to Euro Kiwi. So the Euro Kiwi closed with a doji on Friday. The pair has potential for stops to be tested on both sides this week. Resistance will be 77.34 with support at 74.95. UK data is coming up in just a couple of minutes. On to the Aussie yen. Been really dead in the water here. So the pair, Aussie yen, the pairs found a modicum of support on Thursday and Friday of last week. You can see that right here, kind of stopped the bleeding. The pair remains bearish while below the key level of 78.31. You can see that. Support to start the week will be 77 or 72.27. Oh, that's a bit on the stretch side. If it went, I don't think that would have been right. That would have been all the way down here. That didn't make any sense. With resistance at 74.21. Oh, let's go with this. I don't know how I came up with 72.27. That's, look at that. That's just crazy. That's all the way down here. That didn't make any sense. So we've been in a tight range. And even here it was tight. And then we broke and we stayed in a tight range. So realistically, the resistance, you can say the wicks down here, but we'll go with the bodies to touch. So there's your 74.30. And if they want to test some stops or support, we'll just go with this body right there. That's 72.80. So I don't know how those numbers got thrown around. 1 minute till UK data. And let's go and move into the guppy. So the guppy stabbed lows on Friday before recovering to close above 35.26. You can see that level. Resistance on Monday will be 35.97 with support at 34.80. So let's go move into the sterling odd. And so the sterling odd closed positive on Friday after a rebound on Thursday, challenging recent highs. Resistance will be 84.82 with support at 82.95. We're still moving higher in Nasdaq. It's at 11,167 now, 11,169. We just hit that level on the 5-minute chart, but remember we were looking for a move potentially to 11,176. And then the next area is 11,224. 82.95. And resistance at 84.82. Okay, you can see here we were looking for a move to initial move 11,176 with a potential move up here to, we looked at the, I think it's 11,224. You see it right here. There, 11,230. It's actually 11,230. So the first area was going to be 11,176. On the 5-minute, we had this one right here at the 69. But right in here, 176 is, we've kind of reached that area here. And that's where we came for the 2 hour. You see it, 11,176. We'll open it up. 11,176. So they made it there and potentially go to this body, 11,228. You've already seen we had some pretty big moves here on Friday. You can see Amazon really coming under some massive pressure. Microsoft made it down to test 200. Apple's already down to 108. I'm not even bothering with the pre-market because it's just not worth it, considering, we're coming into the election. I don't think there's anything to be looked at necessarily by looking at some kind of pre-market right now. People are going to stay relatively tight. I think before the election, and Tesla's below 400. Netflix saw a pretty good whack at 475. And I think most people will keep their powder dry going into the U.S. election. As I said, we're seeing a little bit of a rebound here, which is within reason in the NASDAQ. And even in the S&Ps, I'm seeing that they're at 3304 right now. It looks like they're relative to 3309. But that's where we stand here. And I'll go and get the bias chart posted. I think most people will keep it fairly light until we get into the U.S. election. With that, thanks for joining us here in the European Crossover webinar, and we'll see you in the chat room.